This is your technical update from the LMAX Exchange Research and Analytics Desk for Monday, January 5th, 2015. So the euro has broken down, finally clearing that key 2012 base at 120.40, and then taking out the 2010 base at 118.75, trading all the way down to the 1860 area ahead of the latest minor reversal. The next key support for this market comes in by the 2005 base, which is at 116.40. Ultimately, when you look at the daily chart, the market remains locked within an intense downtrend and only back above the 50-day moving average, which comes in around 23.40, would compromise the bearish outlook. Cable remains locked within an intense downtrend, with the market now focused on a test of the 2013 base, which comes in around 148.15. Any rally are expected to be very well capped towards 155, with only a break back above the 158 area to compromise the bearish outlook. Dollar yen remains locked with an intense bullish uptrend, with the market now consolidating ahead of what should be the next upside extension beyond the recent 7-year high at 121.85 and towards the 125 area further up. Any setback should continue to be very well supported ahead of 115.55, with only a break back below this level to compromise the bullish outlook. Euro-Swiss has pulled back since recently breaking above 120.45, but the market continues to show signs of basing ahead of 120. A break back above 120.45 and a close above 120.45 will be required to confirm the basing outlook and open the door for an acceleration of gains, while inability to do so will keep the pressure on the downside with a potential test of the 120 barrier. Aussie dollar remains locked within an intense downtrend, with the market breaking to fresh 5-year lows and now focused on a test of the next key psychological barrier at 80. Any strength in this market should now be very well capped towards 82, while ultimately only back above 85.40 would compromise the bearish outlook. Dollar CAD is now broken up to fresh 5-year highs, with the market trading just shy of the 2007 high 1877. From here, there is risk for additional gains, with any setbacks now seen supported into previous resistance turn support at 1280, and only a break and close back below 1280 to compromise the bullish outlook. Ultimately, a break towards and above 1877 could set the stage for a retest of the 2009 high over the coming weeks at 130.63. Kiwi remains locked within a bearish consolidation over the past several weeks, with the market breaking down recently to test that recent 2014 low and range base just over 76. A break below 76 would confirm the bearish consolidation and open the door for fresh downside towards a measured move objective into the 72 area. Ultimately, only back above 80.35 would compromise the bearish outlook. SPX 500. The S&P 500 has recently stalled out at record highs just shy of 21, with the market pulling back and potentially at risk for the formation of a major top. However, a break and close below key support at 1970 would be required to officially force a shift in the outlook and take the pressure off the top side in the SPX 500. Gold really continues to be contained to a range between 1256 above and 1131 below. The market is in the middle of that range, trading around 1200, and a break on either side will be required for the next clear breakout. A back above 1256 would suggest a major base in place and the formation of this base, which could lead to a shift in the structure and a focus on push higher over the coming months, while inability to take out 1256 will keep the medium-term pressure on the downside and keep the possibility open for a retest and break below 1131 and towards 1000 further down. That's all for today.